For nearly a century, the world has had the honor of bowing before the United States dollar. It sits on its global throne with the confidence of a monarch who did not just inherit power, but was handed it, willingly by nations that found it more convenient to obey than to imagine alternatives. The dollar became the global reserve currency not simply because it was strong, stable, or backed by the largest economy in the world. Those were certainly useful narratives. No, the real reason for its rise can be summed up more accurately as, it was there where it did it, and nobody wanted to crash the system. When World War II ended, the world needed a currency to rebuild shattered economies. The dollar stepped forward with a generous smile and said, "Don't worry, I'll handle it." And everyone applauded. A hero had been chosen not through democratic consensus, but because the alternatives were European currencies that had just survived a psychotic breakdown. The world embraced the dollar like a patient clinging to the nearest hospital bed, whether or not that bed had been sterilized. And from that moment on, the story of global finance became a tale of increasing reliance, subtle coercion, and the slow erosion of monetary independence, all masked by polite press conferences and diplomatic niceties. The dollar didn't just become powerful, it became unavoidable. But like all great empires, its power cast long shadows. Countries began to realize something unsettling. Depending on a single currency for trade, debt, and economic stability is like choosing one doctor for all medical decisions, including whether you're allowed to take medicines made in another country. The United States effectively became the global financial gatekeeper, holding the keys to liquidity, credit, and access to the international banking system. And of course, the world tolerated it. Because what else could they do? Over time, however, this benign dominance evolved into something less benign. Nations noticed that the dollar didn't simply facilitate trade, it dictated behavior. It rewarded compliance. It punished disobedience. It shaped global politics in ways central banks could pretend not to notice, but absolutely did. The United States learned that with the dollar, it didn't just have influence, it had leverage. And once you have leverage, why wouldn't you use it? If a country stepped out of line, its assets could be frozen. If a government made the wrong alliances, its ability to transact internationally could be restricted. If a nation dared to attempt financial independence, it would quickly discover that its borrowing costs mysteriously skyrocketed, and its currency unexpectedly depreciated due to market uncertainty. Yes, market forces. The invisible hand of the global economy. A hand wearing a very specific glove. This system worked beautifully for the United States. For everyone else, not so much. Developing nations found themselves vulnerable to every twitch of the Federal Reserve's eyebrows. When the Fed raised interest rates, their currencies shook. When the U.S. economy sneezed, emerging markets caught pneumonia. When the United States decided to sanction a country, those sanctions applied not only to financial transactions involving Americans, but often to transactions involving anyone, because everything flowed through dollar clearing systems. In other words, the dollar became a financial panopticon, all-seeing eye that watched and influenced global transactions. And yet, despite these increasingly obvious risks, most countries remained loyal, because loyalty was easier than rebellion, because change is terrifying, because financial alternatives were either too weak, too fragmented, or too politically inconvenient. Until now, the rise of BRICS, as Brazil, Russia, India, China, and South Africa marks the first time in decades that a group of major economies has openly challenged the dollar's throne. And while critics dismiss the movement as impractical or symbolic, that critique conveniently ignores a key historical truth. Every financial revolution begins as impossible, until one day it becomes inevitable. But before we jump into BRICS motivations, we must return to the central question. Why would anyone want to replace the dollar in the first place? The answer is simple. Because financial dependence is not a strategy. It's a vulnerability. A big, structural, geopolitical vulnerability wrapped in the illusion of efficiency. Consider what happened to Russia in 2022. Virtually overnight, hundreds of billions of dollars in its foreign reserves were frozen. Not because of a financial crisis, not because of economic mismanagement, But because geopolitical tensions escalated and the global financial system controlled, largely by Western institutions, that was when the world, especially nations not aligned with Washington, learned a chilling lesson. Your money is never really your money if it is stored in the dollar-based system. This realization spread like a quiet shockwave through capitals worldwide. Ministers and central bankers began asking questions they'd never dared to ask publicly before. What would happen to us if we had a disagreement with the United States? Could our reserves be seized too? Are we sovereign, or merely renting stability? These questions are dangerous not because they are radical, but because they are rational. And rational questions mark the beginning of every shift in global power. For many nations, especially those in BRICS, the dollar had become less a symbol of stability and more a symbol of risk, a beautifully packaged, expertly marketed risk. Of course, none of this is spoken aloud in international conferences. Publicly, governments still call the dollar a trusted cornerstone of global commerce. Behind closed doors, however, the conversations are far more candid, filled with the kind of diplomatic panic no official statement would ever admit. But let us be honest. The dollar's dominance, ESN, just an economic arrangement. It's a political weapon, a psychological anchor, and a systemic advantage for the United States. It's an empire without needing to call itself one. And BRICS, they're not trying to destroy the dollar. That would be impossible, impractical, and frankly catastrophic for everyone, including themselves. What they want is something more subtle, more calculated, and far more transformative. A parallel system, a hedge against vulnerability, a currency that cannot be weaponized by Washington, a currency rooted, quite literally, in something America cannot print. Goal. But before we reach that part of the story, we must fully understand the environment that made such a radical idea appealing. The world didn't wake up one morning and decide the dollar was inconvenient. It slowly realized, over decades, that the dollar was a single point of failure in the global financial system. And BRICS each, for different reasons, concluded that relying on a single point of failure is not a strategy. It's surrender. Thus begins the story of the greatest monetary challenge of the 21st century. An attempt not to dethrone the dollar, but to build an escape hatch from it. A gold-backed alternative, a financial lifeboat, a new anchor in a world that is tired of pretending it doesn't feel the weight of the old one. For decades, the idea that a group of countries could challenge the dollar sounded like a financial fairy tale, or maybe a comedy sketch. After all, BRICS hardly looks like the kind of coordinated, polished alliance you'd expect to rewrite the global monetary order. It's less the Avengers and more 5 neighbors who dislike the same landlord, so they decide to form a committee. Yet somehow, against every prediction and in defiance of countless smirks from Western think tanks, BRICS has evolved into something the world can no longer laugh off. It's the beginning of a counterweight. This coalition isn't held together by ideology, shared values, or unified political systems. It's held together by a single, powerful emotion. They are tired of being financially supervised by the United States, and that shared exhaustion has proven to be a stronger glue than anyone expected. Of course, BRICS didn't start as a rebellion. It began as a polite acronym coined by an investment banker who simply wanted to sell financial products. No revolution, no manifesto. Just a marketing concept. But like all dangerous ideas, it grew beyond its theoretical birthplace and became something real. The United States pretended not to notice until it was too late. Because what happens when the world's largest commodity producer, Russia, the world's largest manufacturing base, China, one of the world's largest consumer markets, India, the agricultural powerhouse of South America, Brazil, and Africa's biggest industrial economy, South Africa, decide they'd like a new financial global finance starts to sweat. And make no mistake, the sweating has begun. But before we get to the shiny new gold-backed ambition, let's understand each member, because their motivations for creating a dollar alternative are as diverse as their accents. Let's start with Russia, the sanctioned catalyst. Russia didn't choose monetary independence out of philosophical reflection. Oh no. It was shoved into this new worldview by a series of Western sanctions so aggressive that even neutral countries looked uncomfortable. When hundreds of billions of dollars in Russian reserves were frozen, it sent a very loud signal to every nation watching. Your reserves are not truly yours unless Washington approves of your behavior. Russia learned the lesson quickly and painfully, and once you've been financially punished on a global stage, you develop a newfound appreciation for alternatives. Russia wants a new currency system for the simplest reason of all: survival. It wants a monetary world where geopolitical disagreement does not equal the freezing of national wealth. In other words, Russia is the angry, wronged character who finally says, "Fine, I'll build my own system, with gold and friends." Next, China. The patient architect. China's motivation is more elegant, calculated, sophisticated, and wearing the mask of long-term planning. Unlike Russia, which reacted to financial warfare, China is thinking in decades, not months. Its vision is grand and unmistakable. A world where trade, commodities, and reserves settle increasingly in currencies other than the dollar, preferably Chinese ones. But China knows the yuan will not gain trust overnight. People don't simply abandon the dollar for a currency managed by a single-party government with tight capital controls. So China must think strategically. Enter the gold-backed BRICS concept. Gold adds legitimacy. Gold adds trust. Gold adds the reassurance that this new system is something stable, something ancient, something that can't be manipulated by political moods. China loves stability narratives. It manufactures them as efficiently as it manufactures everything else. And if you think China isn't serious, look at its gold reserves. Better yet, look at the gold reserves its citizens have been encouraged to by 4 years. The gold accumulation strategy is not an accident. It's preparation. Now, let's talk about India, the reluctantly curious participant. India's relationship with the United States is complex, publicly friendly, quietly cautious. India wants strategic autonomy, global influence, and economic power. It also wants to avoid becoming collateral damage whenever Washington and Beijing have one of their geopolitical shouting. India doesn't hate the dollar, it merely doesn't trust a world where U.S. monetary policy can destabilize its economy every time the Federal Reserve wakes up in a bad mood. And yes, India argues with China enough to make BRICS meetings awkward. But when it comes to reducing dollar dependence, suddenly everyone gets along much better. India is not joining a revolution. It is simply buying insurance that comes in the form of a gold-backed currency system. To collapse when the U.S. government decides the world needs another round of sanctions. Then we have Brazil, the commodity realist. Brazil has one of the most diverse economies in the world. Yet it has spent decades trapped in cycles of dollar-denominated debt and currency volatility. Every time the U.S. raises interest rates, Brazil feels it like an electric shock through its financial system. Brazil doesn't want to destroy the dollar. It simply wants less chaos caused by decisions it does not control. A gold-backed international currency. Something stable. Something beyond the reach of the U.S. Treasury. Brazil doesn't just like the idea. It craves it. And finally, South Africa, the strategic beneficiary. South Africa understands a fundamental truth. The global monetary system is designed around hierarchies, and countries at the bottom of those hierarchies bear the heaviest economic burdens: higher borrowing costs, weaker currencies, and unstable capital flows. A BRICS currency offers something South Africa rarely gets: leverage. It's not a revolution for South Africa. It's a chance at financial dignity. Separately, these motivations would be inconsequential. Together, they form a geopolitical pressure point powerful enough to make the dollar feel something it hasn't felt in decades. Competition, not a threat. Not yet, but competition. A gold-backed BRICS currency isn't being planned because it's easy. It's being planned because each BRICS nation has realized, for different reasons, that depending on the dollar is equivalent to putting your national future in a vault that someone else has the keys to. And let's be clear, none of these countries trust each other completely. There are territorial disputes, political rivalries, and clashing visions for the future. But nothing unites countries faster than a shared discomfort with American monetary power. It's not personal. It's structural. Still, the real question is not why BRICS, but why now? Why has this moment, out of all decades of quiet financial compliance, become the tipping point? The answer lies in the global financial system, as growing imbalances system where the United States can print trillions without consequence while developing economies face currency collapse if they print a fraction of that. A system where the Federal Reserve's decisions impact African farmers and Asian manufacturers more than American consumers. A system that looks less like global cooperation and more like a pyramid with one very lucky country at the top. BRICS members are not fools. They see the structure. They understand the leverage, and they know that waiting another decade will only cement the imbalance further. So, they're acting now. They're building something symbolic, yet strategic. Something small, yet potentially monumental. Something controversial, yet impossible to ignore. A gold-backed alternative to the dollar. Not to replace it. Not to destroy it, but to ensure that no nation ever again feels the cold shock of having its reserves frozen, its assets confiscated, or its financial lifeline severed because of political differences. In short, BRICS is creating the currency they wish had existed before the world learned how dangerous it is to rely on the dollar. What do you think? Is this the beginning of a new financial era? Or just a lot of talk? Let me know your thoughts in the comments. Thanks for watching, and if you found this interesting, don't forget to like and subscribe for more. Why are the BRICS nations so obsessed with gold? It's not because they want to go back to medieval times. It's because they're planning something big, and gold is their secret weapon. Think about it. New currencies pop up all the time, but nobody cares. BRICS knows this, so instead of launching just another digital coin, they're reaching for something ancient, something that feels real, even when everything else doesn't. They're reaching for gold. For thousands of years, we've been fascinated by this shiny metal. It has almost no industrial use, yet we've built empires on it. Why? Because we all collectively agree it has value. It's the world's oldest financial magic trick, and BRICS is betting that the magic still works. Their logic is simple. The West can print endless dollars, devaluing everyone else's money in the process. You can't print gold. You can't just create it with a keystroke during a crisis. Gold is slow, inconvenient, and stubbornly real. And in a world tired of financial games, that inconvenience is its greatest strength. The US dollar is powerful, but it has a huge weakness. Every time there's a problem, a financial crisis, a pandemic, the solution is always the same. Print more money. The rest of the world watches as their savings shrink because of decisions made in Washington. BRICS nations have had enough. They see the dollar's dominance not as a sign of stability, but as a system held together by fear. So how do you fight a currency built on fear? You use something built on a 6,000-year-old belief. Gold doesn't take political sides. It doesn't impose sanctions or freeze assets. It just exists, completely indifferent to politics. That makes it the perfect symbol for a financial rebellion. Let's be clear. This isn't about making a fairer monetary system. This is a power play. A gold-backed currency gives BRICS something the US can't easily control or sabotage. It creates a reserve asset, immune to sanctions, and a way to settle trades outside of the Western banking system. They don't need to kill the dollar. They just need to weaken its monopoly. For decades, the US dollar has been the undisputed king of global finance. BRICS is simply reminding the world that other gods are allowed. They're aiming for a multipolar financial world, the very thing the US has tried to prevent for nearly a century. In an age of exploding debt, crumbling trust, and global instability, gold offers something priceless. Neutrality. It's a shield against the chaos of our times. It doesn't care about elections, wars, or scary economic reports. It provides a kind of stability that paper money just can't match. Western experts usually dismiss these plans. They mock them, call them unworkable, and then secretly worry, because they know that financial revolutions don't happen overnight. They start when enough countries get tired of the old system's risks. BRICS doesn't need a perfect system. They just need momentum. And gold is the ultimate catalyst for momentum. This isn't just about economics. It's psychological warfare. The US tells the world, trust us. BRICS responds, you can trust gold. In today's world, where trust in institutions is at an all-time low, which message do you think sounds more convincing? The game has changed, and gold is back on the board. For just a moment, let's pretend the BRICS nations' dream of a gold-backed currency isn't just a bold idea, but a perfectly planned masterpiece. Imagine it as the move that finally knocks the US dollar off its pedestal after 80 years of global dominance. Picture this as the exact moment history pivots, the financial tides turn, and old empires crumble under the weight of their own paper promises. Okay, now let's come back to reality. What BRICS is trying to do isn't just ambitious, it's economically radioactive. Trying to build a gold-backed challenger to the world's reserve currency is like walking a tightrope over a geopolitical canyon while juggling inflation, foreign debt, and conflicting national interests. And yet amazingly, they seem serious. To really get what a massive challenge this is, you have to appreciate gold's long and almost tyrannical history. For thousands of years, humans have agreed that gold is valuable, mostly because it does absolutely nothing. It doesn't rust, it doesn't pay you interest, it doesn't generate earnings. It just sits there, looking beautiful and inert, in vaults and central banks. The dollar, on the other hand, is built on trust. Trust that the US government will pay its debts. Trust that the Federal Reserve won't completely lose its mind. And trust that America's political system, for all its chaos, will ultimately keep things running. Gold doesn't need that trust. Gold's message is simple. I exist, therefore I am valuable. The BRICS nations, Brazil, Russia, India, China, and South Africa here. This loud and clear. They're tired of a financial system where one country can flip the offs. They've seen sanctions and weaponized finance used as political tools. And unlike the dollar, gold doesn't care about your foreign policy. It can't freeze your assets. So BRICS, with its massive combined population and economic power, sees gold as the perfect anchor for a new world order they hope to build. It's a poetic idea, until reality crashes the party. To create a gold-backed currency, you need two things: a lot of gold, and the willingness to let gold run your economy. BRICS has the first one. They absolutely do not have the second. Let's look at the countries one by one, because the contradictions are stunning. China has huge gold reserves, but its economy runs on government control, opaque financial moves, and massive credit expansion. A gold standard would demand transparency, and China and transparency don't exactly mix. Russia loves gold because it's sanction-proof, but its economy depends heavily on volatile energy exports. A fixed gold price would strangle its ability to respond to oil and gas price swings. India has a deep cultural love for gold, but a gold standard would limit the credit and liquidity its consumer-driven economy needs to grow. In Brazil and South Africa, they'd welcome a stronger currency anchor, but they would suffocate under a system they can't adjust. Their economies need constant monetary tweaks to deal with global commodity cycles. In other words, all these countries want the prestige of gold without any of the discipline. This isn't a plan for a monetary union. It's a wish list. Then there's the logistical nightmare. Imagine the meeting. Economists and policymakers gather around a table. Someone pulls up a 400-slide PowerPoint called a simplified framework for a BRICS gold-linked currency. The first few slides look great. By slide 200, they realize they can't agree on anything. What's the exchange rate to gold? Who governs this new system? How do we audit the reserves? How do we handle settlements? What about inflation? What happens if a country needs to break the peg in an emergency? And then someone asks the killer question. Who actually holds the gold? The room goes silent. This is a huge deal. To issue a currency backed by gold, someone has to physically store it. China isn't letting anyone near its vaults. Russia insists its gold stays on its soil. India doesn't trust China, and Brazil and South Africa do not want to hand geopolitical power to whichever nation becomes the official gold custodian. So they might come up with a brilliant compromise. Let's create a currency backed by gold, but none of us will actually let the gold be moved. It's a gold standard where everyone supports the idea, but nobody trusts each other enough to make it work. This leads to the biggest paradox of all. A gold-backed system is like a marriage. It demands absolute trust, shared responsibility, and giving up some individual freedom. BRICS isn't a marriage. It is more like a polite dinner party where everyone is smiling while secretly holding knives under the table. Think about the dynamics. China and India have ongoing border disputes. Russia and India are military partners, but their energy interests are drifting apart. China and Brazil are trade partners, but they're also huge agricultural competitors. These are the nations that are supposed to run a unified monetary system. A gold standard doesn't let you just ignore disagreements. It forces you to align, and it punishes political games with immediate financial consequences. BRICS doesn't do alignment. It does strategic coexistence. And for a gold standard, that difference is fatal. Here is the fundamental irony. BRICS wants to escape the dollar's dominance by building an even stricter system. Yes, the dollar system can feel unfair and politically weaponized, but it's also flexible, liquid, and backed by deep, established markets. A gold system, by contrast, is rigid, immobile, and offers zero ability to stimulate an economy during a crisis. It's like leaving a frustrating job to start your own business, only to discover you now have to work 16-hour days and handle your own taxes. BRICS complains that the dollar system is a burden. A real gold system would be 10 times more burdensome. They complain the dollar is controlled by one country. A gold system controlled by 5 competing countries would be pure chaos. At its core, the BRICS gold idea isn't really about economics. It's about geopolitical frustration. The wave of sanctions against Russia after 2022 was a wake-up call for many governments. They suddenly realized that reserves held in dollars or euros are URND truly yours if your politics do you align with the West. The BRICS gold plan is a direct response. Gold can't be frozen, blocked, or sanctioned. It's a pure survival instinct. But survival instinct doesn't make for a viable currency. A currency built on political resentment tends to behave like political resentment. Powerful at first, but unstable and corrosive over time. That's not how you build a global reserve currency. That's how you make a political statement. But here's the final twist. Even if BRICS completely fails to launch its gold-backed currency, just the attempt could change global finance forever. The message is loud and clear. The world is no longer comfortable with a financial system controlled by a single power. This is the real threat to the dollar. Not a perfect BRICS currency, but the slow erosion of the belief that there is no alternative. Confidence is the dollar's greatest asset. Doubt is its greatest enemy. And BRICS, even with all its internal conflicts, is manufacturing doubt on a global scale. Whether it's backed by gold or not, the moment the world starts diversifying, trade away from the dollar, reducing its holdings of U.S. debt and building new financial pathways, the dollar starts to lose the gravitational pull that made it so dominant in the first place. In the end, BRICS might not need a gold-backed currency to challenge the dollar. It just needs to build enough momentum to convince the world that a multi-currency future is inevitable. And ironically, that goal might be achieved long before their golden dream ever comes true. If the past few years have taught us anything, it's this. The idea of a gold-backed BRICS currency is like a financial Rorschach test. Everyone sees what they want to see. Some see economic salvation. Others see a grand illusion. Some see a revolution waiting to happen. And the rest? Well, they sensibly see a bureaucratic nightmare wrapped in a geopolitical headache, tied with a glittery ribbon of wishful thinking. But whether you love the concept, hate it, or are just sipping your tea from a safe distance, while the world rearranges itself, one truth is unavoidable. A gold-backed BRICS instrument, whether real or symbolic, is set to collide with the global monetary system in ways we are absolutely not prepared for. So let's explore the chapter that future historians will look back on with a mix of sighs, amusement, and maybe even a few choice words. What happens next? For decades, the US dollar has enjoyed an extraordinary luxury. The luxury of not needing to care. It didn't need to care when Europe created the euro. It didn't need to care when Japan tried to engineer financial miracles. It didn't even need to care as China slowly built its renminbi empire, one regulation at a time. But BRICS proposing a gold-linked alternative. That's different. That sends a chill down even the most confident spines in Washington. Why? Because it reveals something that was once unthinkable. The global majority is seriously entertaining the thought of monetary independence. The immediate danger isn't that a BRICS gold currency will instantly dethrone the dollar. It won't. But the dollar supremacy isn't maintained by force, it's maintained by confidence. The moment central banks start asking, what if the dollars? Armor cracks. And in global finance, a crack is the beginning of an avalanche. The United States is now watching with narrowed eyes as nations shift reserves into gold, sign bilateral trade deals in non-dollar currencies, and quietly hedge their bets against a system that once felt eternal. BRICS doesn't need a perfect currency. It only needs to convince the world that the dollar is no longer invincible. And that message is spreading like wildfire. So, why gold? BRICS didn't choose gold because they're a bunch of romantics. They chose gold because it's the only thing in the financial system that cannot be bribed, sanctioned, hacked, or geopolitically intimidated. Gold is the Switzerland of assets. It's neutral, it's obedient to no one, and it's inconveniently immune to political pressure. And this neutrality is glorious, maddening neutralities. Precisely why BRICS is leaning on it. They don't trust Western institutions. They don't trust American intentions. Heck, they don't even fully trust each other. But they trust gold. Because gold doesn't demand unity. It just demands storage. And believe me, BRICS has plenty of vault space. Now, imagine the scene. BRICS officially announces a gold-linked settlement currency. The global markets, which absolutely hates uncertainty, will meet the ultimate wild card. The reaction will be predictable, yet utterly chaotic. Gold will surge, because investors love drama, especially when it glitters. The U.S. Treasury market will tighten. It won't collapse, but it will feel the pressure. Central banks around the world will start rebalancing their holdings. Even slightly, and in today's markets, slightly is enough to make trading algorithms panic. Emerging market currencies will swing violently as investors instantly reevaluate which economies are now aligned with which monetary sphere. And the oil markets, they could bifurcate. Imagine oil priced partly in dollars and partly in a new gold-linked BRICS instrument. It would be financial schizophrenia, but for commodities. But the biggest shockwave of all will be psychological. Investors will finally realize that the era of a single, dominant, global reserve currency may be coming to an end. Not with a bang, not with a revolution, but with a slow drift-like continent separating over millions of years, but compressed into a single, frantic decade. If BRICS moves forward, the most destabilizing reactions won't even come from its own members. They'll come from America's allies. Think about countries like Saudi Arabia, Turkey, Indonesia, Egypt, Nigeria, even Mexico. These nations have no particular reason to pledge eternal loyalty to the dollar. They respect it, they use it, they rely on it, but they don't love it. The moment an alternative becomes viable, even partially, they'll start diversifying. They won't abandon the dollar overnight, but they'll diversify. And diversification is the kryptonite of monetary hegemony. Once allies start shifting even 5 to 10% of their reserves into gold-linked systems, the dollar's dominance becomes a matter of inertia, not inevitability. And inertia, as we know, always decays over time. But here is the delicious irony in all of this. BRICS might just destabilize the global system long before it ever manages to stabilize itself. While the bloc is unquestionably powerful on the world stage, it is dangerously fragmented internally. China and India still view each other with deep suspicion. Russia is sanctioned into a corner. Brazil's political alignment seems to change with every election cycle, and South Africa faces its own deep-seated structural instability. This is the financial equivalent of forming a band whose members live in different countries, speak different languages, and can't even agree on the name of their album. A functioning gold-backed currency requires things like unified monetary policy, joint institutional oversight, shared enforcement mechanisms, and mutually agreed-upon transparency, BRICS. has none of these. This creates a darkly comedic possibility. BRICS might succeed in weakening the dollar long before it ever succeeds in strengthening itself, creating a global ripple without a solid global foundation. So what's the ending no one expects? Here's a twist that will absolutely relish. The dollar may lose influence. BRICS may gain influence, but it's very possible that neither will win. Instead, the world may be entering a new era of fragmented trade blocs, dual currency systems, and regional monetary spheres. An era of volatile capital flows, competitive gold accumulation, and unpredictable sanctions. A world with permanent financial tension. In this world, no single currency dominates. Gold reemerges not as a currency standard, but as a neutral referee. The global economy starts to act less like an empire and more like a chaotic, geopolitical marketplace. This isn't stability. This is organized turbulence. And BRICS, whether it meant to or not, is ushering it in. The arrival of a BRICS gold-linked instrument, no matter how imperfect, marks the end of an era. Not because it will dethrone the dollar, but because it challenges the myth that the dollar cannot be dethroned. In global finance, psychology is everything. And right now, that psychology is shifting. The world is slowly, messily, preparing for a future with multiple reserve currencies, a hybrid system of gold and fiat money, and a more decentralized trading world. The Western monopoly on money is declining. The BRICS Gold project doesn't even need to fully succeed to be successful. It merely needs to change behavior. And that, astonishingly, it has already done.